Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Hey everyone, we have launched the BODC Multifamily Impact Fund. Invest with a trusted operator with a track record of success. Our fund offers diversification, risk mitigation, tax benefits, and stringent acquisition criteria. If you'd like to learn more, head over to our website at breakofdaycapital.com.
Choosing the right insurance coverage for multifamily properties isn't that complicated, if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz, and we'll start the conversation.
Today, I want to talk to you about selling a deal in today's market. It wasn't an easy decision to sell. You certainly aren't getting top dollar for your deal because it's just not a frothy market, given where interest rates are. But waiting another year or two doesn't guarantee that either. Plus, you have to take into consideration of time value of money. If we do hold 1 or 2 years longer, how much value do we actually gain? We were initially looking to refinance this property and return the initial investment to investors through a HUD loan, which takes a while, but you typically get more proceeds than other fixed rate options. We had done some work on the property that HUD requested, but then they came back with lower proceeds and wanted us to do more work on the property to meet their criteria. This was definitely a setback, and so we discussed potentially selling the property and locking in the gains versus waiting until the conditions were perfect, as who knows when that time is. So we asked our investors to get their opinion. We received a resounding yes from our investors because they wanted to get a win when many deals out there have stopped distributions, had a capital call, or even worse, gone belly up. This was going to be a really solid return, and our feeling is that it's never a bad thing to take a win. We implemented our value-add plan, forced a ton of appreciation, and with refinancing, not a great option, we took what we felt was the best option out there after investors gave us their opinion. Certainly, you want your broker to find a buyer who's going to close and not waste a lot of your time by just walking away if he wants to. So you need to get some hard money, which we did. The buyers used up their extensions and negotiated another extension with more hard money, so they were in it to win it. These days, it does take a while to close a deal, whether it's the lender, raising money, or both. And ultimately, they did close, which was huge. You hate to go down this path after many months and not get a deal done. So kudos to everyone involved for getting this done. We got a nice win for our investors, and hopefully the buyers will do the same when they ultimately sell. So let me tell you how we got this deal. This was early 2021. We were out to dinner celebrating a deal we got with the broker, or that we closed on a deal at the end of December. And he casually kind of mentioned the student housing property in Tucson. And he didn't think we'd be interested in it. We didn't do student housing, but the numbers on the deal sounded really interesting. There was a low cost, a large bedroom count, and I was thinking there may be something here. And when you have something that sounds pretty good, you don't waste time. You act on it right away. And so we did that. We went back to the hotel and underwrote the deal that night. We toured the property and the comps the next day, submitted an offer, and spoke to the owner the following day to talk about our offer. This was during COVID, and we were told the seller will only give us 45 days to close, which was a really tight deadline with many hoops to jump through. We had to work out the permitting issue of changing it from student to multifamily. securing a loan and raising all the capital we needed. I think we asked for 24 hours to think about it before committing to make sure we could pull this off. We wanted to respect the owner and the broker. If we said yes, we had to be all in. We reached out to a bunch of lawyers and finally found our way to a top land and zoning attorney in Tucson who thought that we should be able to get approval to convert the property from student housing to market rate. We also need to make sure we can get a lender to do this deal in a tight window. And this type of loan, which it wasn't conventional, so there weren't a ton of lenders out there that would do this. But because of our prior relationship with a local bank and our initial talks, we felt like we can go for it, and we ultimately submitted our offer and went for it. We were super determined, and we were all hands on deck with our team to do due diligence and make enough progress with the city regarding converting it to market rate from student housing. The lawyer helped us navigate the approval process, though we knew we wouldn't be able to get it approved by the time we needed to close and raise the capital. We eventually got to the right person in the Tucson permitting office and got to a point where we felt confident that we would be approved in due time. So obviously we wanted to de-risk the asset. If we didn't feel confident about getting that approval, then we would have just walked away from the deal. Everything was running on that piece, and thankfully we were able to move forward, and it was full steam ahead. The local bank also came through. We got an 11-year loan with 5 years fixed at 4%, and it would reset after 5 years. We got 2 years IO with a step down prepay and 67% LTC. It was recourse, which is common when you're getting a loan from a local bank, but we felt it was worth the risk on our part. The deal wouldn't have materialized if we didn't have strong relationships and a solid team. Getting deals done this size or bigger definitely takes a team. So here are the numbers. We paid a little over $8 million, and the cap stack was just over $10 million when you included the capex, the closing costs, working capital, and reserves. Given the vintage 1972, you need to have a lot of reserves as things break, and you don't want to have to rely on cash reserves to pay for it. Have that money up front for things that may break because they ultimately do. If they don't, then great. You have the extra money. You can give it back to your investors. Don't cross your fingers hoping things won't break and kick the can down the road. That's not how you do business, and I strongly suggest you raise extra money, have a lower projected IRR, and cover your butt and protect your investors. If a deal is too razor thin to raise money, to raise this money up front, then you shouldn't be doing the deal. And our break-even occupancy was a low 63%, so it definitely was not razor thin. Paperwork wasn't kept well at this property, so we had some issues with some leases when we took over. We had one thing that popped up, and I can't make this up. Someone claimed that the old manager told her because it was her birthday, she didn't have to pay rent that month. Could you imagine each tenant getting one free month of rent each year? Crazy. So obviously we said, show us proof, and she couldn't find it. There were other little things regarding lease agreements that we had to work through the first year, but this isn't uncommon when you buy from a mom and pop. And although I wouldn't classify this as a previous mom and pop owner, there certainly was a lack of oversight regarding the paperwork. The most important thing at takeover was leasing up. We had 15 vacant units and 16 units that only had one person in a 2, 3, or 4 bedroom unit. So this was a horrible use of our inventory. And what we needed to do was maximize the space. So we try to condense the units the best that we could to open up completely empty units to rent out. This allowed us to lease up faster and spread the leases out over a year's time versus all of the units having to be turned all in 1 month when students moved out and before students moved in during the summer. We also offered some shorter or longer term leases than the traditional 12-month leases to more evenly spread it out over the year as well. We also saw some other income opportunities at this property. They didn't charge back any of the utilities, which is called RUBS, Ratio Utility Billing System. We grew it from zero at takeover to almost $260,000 a year, which was almost 2 times what we projected in our pro forma. We also grew other income by almost 200,000. And to be fully transparent, expenses grew about 20% more than we predicted over the 3 years, but thankfully, rental income grew by almost that much as well. Another item that would greatly increase the value of the property was to be able to divide the 4+2 units to 2+1 and 1+1, which would get us more income. A bigger unit, the 4-bedroom could rent for say $1,500, $1,600, whereas a 2+1 may get us $1,200, let's say, and a 1+1 may get us $1,000. So we're making $700 more this way per that 4+2 unit. What we needed to do was get an IPP, an individualized parking plan that the city required. Even though we were reducing the amount of bedrooms over the whole property by taking away basically one bedroom, the zoning had changed over the years, so we had to go through this lengthy process. There was plenty of parking around, outside the property on the streets and a bus stop at the corner. But we did have to hire someone to do a survey at night to see how many cars were parked in that area and then meet with the community. And we worked with the same zoning attorney that helped us change the property from student to market rate. And after about a year of back and forth with the city and our attorney, we finally got the approval to create 12 extra units from the 4-bedroom units. While we're working on the permitting of dividing the units, increasing income, and implementing our value add plan, there were other issues we had to deal with. After 10 months, we decided we needed to switch property management companies. The company we were using was based in Phoenix, and when the regional manager left, they really struggled finding a replacement. When they finally found someone, something happened in that person's life, and she left as well. So it was really setting our properties back in Tucson, and we needed to make a change. We really respected the owner of the company we were using, but unfortunately, we just weren't getting what we needed, and ultimately had to make the change, which is never easy. We also realized that we had to rebrand the property because a lot of people knew it as student housing. So we get a lot of people that wanted to rent 1 bedroom versus a full unit. We didn't mind having students there, but we had a very limited supply of the 1 bedrooms, and we wanted to make sure our property manager had quality leads and not waste the bulk of her time by dealing with people that weren't going to ultimately rent with us. It wasn't a huge cost, but everything adds up and takes time. Another project we were working on was adding solar to the property. Solar is good to add to a master meter property since we were charging residents for electricity. They weren't getting billed directly because the property had a boiler chiller. You can buy solar outright and save a lot more money, or lease it and have basically zero out of pocket. And we prefer to lease it and not have to own it. There was definitely some tax incentives by owning it, but you had to own it for about 10 years, and we knew we were going to sell within 3 to 5 years. So it just didn't make sense for us. So by leasing it, we were looking at about $20,000 savings per year. And if you divide that savings by a 5.5 cap rate, you're looking at about creating $360,000 in value. Not a ton of value, but value nonetheless. And all these things add incremental value. So every little thing helps, and we're working on many different projects. Solar took over 2 times as long. So it took a little over 2 years. And when we were looking to potentially sell the property a year earlier, it was more of a negative than a positive. Buyers didn't understand the finances of it, and despite best efforts by the broker and solar company, it just wasn't looked at favorably. Probably if we had bought it outright, then maybe it would have been different. But when we finally went to sell this go around, the solar was finally coming online and wasn't as much of an issue. We were able to work through it. This property certainly kept us on our toes with occupancy going up and down, staff turnover, things breaking, but you deal with them and keep moving forward. There's never a dull moment. It's a lot of work, and that's the beauty of investing passively. We have a team of people that handle the problem so that investors can do more of whatever they want to do and not have to deal with toilets, tenants, and trash. Hopefully, you had some aha moments about selling a property in today's environment and what goes into buying and operating a property. It's a ton of moving parts, but hopefully it pays off in the end. There are definitely easier deals out there to buy, but also a lot less value to create. And we love creating value. I'm glad to close the books on this one, provide another win for our investors, and see what value the new buyers can create. There's always opportunity out there, and that's what I love about real estate investing. This is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.